Hello everyone, welcome back to my channel Tip Tricks and Tech. Haven't done a video in a long time, but today I decided to do a video because I became a financial professional and I'm licensed to do health and life insurance in the state of New Jersey, and I could do anywhere in United States. So I just wanted to explain a couple of items. So if you haven't subscribed my channel, please consider subscribe because this is the first video of that series. I'll be explaining about 401k. I'll be explaining about will and trust. I'll be explaining about so many things which I learned during this course. I would like to share with all you guys. So let's go and dive in. Today's episode is going to be regarding 401k versus IUL. Which one is best for you? What you should consider and all those things. So let's go and dive in. Okay, today we're going to discuss about the benefit of index universal life over a 401k plan. Understanding the advantage of IUL for long-term financial growth. So that's what we are discussing today. So let's move into next slide. Why compare IUL and 401k? So obviously these are the most advanced plan, one of the best plan out there. So we are pretty much comparing 401k with IUL and see which one is beneficial for you, right? Both are popular term and financial planning option. Key difference are tax benefits, flexibility, and risk. Understanding these can help make informed financial decisions. So that's what we're gonna discuss about. We're gonna look into it. Let's go to the next slide. What is 401k plan? A 401k plan is employer-sponsored retirement savings plan. Contributions are pre-tax, reducing the taxable income. Means that these are pre-tax amounts. So let's say it's versus IUL are Roth tax, means after tax. So pretty much whatever you are contributing to 401k is pre-tax, so reducing your taxable income, and the growth is tax deferred until a withdrawal. So but the problem is you'll be paying tax when you withdraw the money. And investment option include mutual funds and stocks, and subject to a required minimum distribution after age of 73. So that means that even if you wanted to keep the money for your heirs or beneficiary, you can, because you need to start taking the money at the age of 73. Next one, what is an index universal life policy? So this is explaining what is index universal plan, which is a permanent life insurance policy with a cash value component, which means that this is 100% permanent. That means that you will get this money no matter what happened to you. Okay, means even the age. This is not a term that you will lapse a policy when you hit certain age. This is not a policy that lapse if you end up having a disease or anything like that. So this is a permanent life policy, like a whole life. Now, the cash value growth is linked to an index. So obviously the cash value of this money, they will invest in an index like S&P. Offers downside protection against market loss. This is the main benefit which I was attracted because on a 401k, that says if you have $100,000 and then all of a sudden market crash, you know that recently for the last couple of weeks the market been crashing, and let's say if you have $100,000, if the market crash and then you end up having negative growth for that year or quarter, you will 100,000 will be reduced to 70,000 depending on the value of the thing. Versus in IUL, there's a lock period. That means if the market performs below 0%, that will lock their money and it will not go down. There's always a lock there, so you may not get any growth for that year, but you will not lose any money because it's a downside protection. Okay, so offers downside protection against market loss. That's what I mean. And provide tax-free death benefits for your beneficiaries, and no RMD, so we don't have to worry about taking this money when you're 73. If you don't want to take the money out at all, if you want to leave it to your beneficiary to create a generational legacy wealth for your beneficiary, you can do so by this plan. Next one, the key benefit of tax 401k. So let's explain the benefit of 401k. The 401k contribution are tax deferred, but withdrawals are taxed. So that means when you are, let's say if you are income right now, you make 100,000, whatever money you put into the 401k, these are tax benefit. That means you only have to pay tax after the money that you put in 401k. So whatever money you put in the 401k, it is tax. You don't have to pay tax right now, but when you take out the money, you have to pay tax, right? But now it will be beneficial for people who is on high tax bracket right now, but later on will be goes under when your retirement age comes, right? It's obviously our income will go down, so that will be beneficial for them. Next one is IUL cash value grows tax deferred and can be accessed tax free via loan. So, with IUL, the value, the whatever cash value is growing is tax deferred, and also it can be accessed tax free cash loan. I mean, even 401k you can access tax free cash loan too, right? Now, tax-free death benefit for hires. That means that whatever death benefit you have in this plan, that means 100% tax-free that goes to your beneficiary, and no penalty for accessing their fund at any age. So, good thing about it, if you have money that you can take out the money, you can take out any age. You don't have to wait till 59 and a half like a 401k. For 401k, you have to wait till 59 and a half to take out the money. So this one, you don't have to do that. So that's another benefit. Yeah, key benefit to growth potential and risk management. Now, 401k direct market exposure with higher growth potential but risk of loss. So that means that if an index perform 32%, they will give you 32% growth for that year versus IUL maxed out at 10%. So they will not give you more than 10%. But the issue with the 401k, when the market perform negative 32 or negative 25, let's say, your money will go negative 25. But IUL lock it at 0%, it would never go down. So that's why it's like when market performs, the company makes more money. When market not performing, we make big money. So that's kind of guaranteed amount, and it's a safety for us for your future. And IUL growth tied to market index, but with the floor of usually 0% to protect against downturns. IUL cap rate limits an upside potential, but ensures steady accumulation. So this is what I just explained. Okay. Now, key benefit, flexibility in accessing fund. 401k penalties and taxes for early withdrawal before age of 59 and a half. So you cannot access your money. You can, but you would have to pay a penalty if you access it before 59 and a half, and you have to pay tax. Well, IUL access fund via policy, loan amount anytime, and tax free. You don't have to wait till 59 and a half or anything like that. No required minimum distribution. So like I told you before, there is no required minimum distribution needed, because you can you don't have to. If you don't want to take out money, you don't have to take out money. You can leave it for your beneficiary, and they will end up having a lot of money. Lifetime benefits. 401k primary for retirement savings, limited liquidity, right? IUL provide financial security during life, and for beneficiary can be used as emergency fund, college fund, or supplemental retirement income, which means 401k is basically for your retirement, not for your protection. If you die, you don't get any money. Whatever you have in your bank, you will get it, but you don't get any extra money. But IUL comes with insurance amount, face amount. So if you die, then your beneficiary will get that, right? So your family will be safer. And 401k versus IUL can be used as an emergency fund. You can withdraw anytime, college fund, or supplemental retirement income anytime. You don't have to wait for any certain period of time. Key benefits, protection for the loved one. Like I said, 401k provides savings, but no built-in protection, right? There's no built-in protection. IUL includes life insurance, death benefits, ensure wealth transaction. So, potential downside of each option. So let's check out the potential downside. Okay, 401k is market volatility, tax implication on withdrawal, early withdrawal penalty, IUL caps on return, potential cost of insurance, requires discipline in policy funding, right? So these are the potential downside for each policy. 401k is a high market volatility and has tax implications on withdrawal and early penalties, versus IUL has a cap on return, like I mentioned, the cap at 10%, and the potential cost of insurance. You have to pay for insurance, because obviously it comes with an insurance. You would have to pay insurance cost and require discipline in the funding. So you have to make sure that you be funding pretty much, because this is Roth money, right? This is not like your employer take it out without your. I mean, once you sign, they will take out monthly or bi-weekly, depending on how you get it. This one you have to pay from your pocket, right? So you have to make sure it's pretty much now the ACH direct deposit. Make sure that you pay them monthly, or they will automatically take it. So you have to have a discipline on that. Otherwise, you will lapse your policy. Which option is right for you now? So depending on your financial need, goals, and risk tolerance and liquid needs, you can decide, right? Many use both to balance risk and benefit, right? So I would say, don't put all your eggs in single basket. Make sure to distribute it. So if your employer offer 401k, definitely take that, because there's most of the employer match what you put in, like at least 4-5%. So those are free money. Make sure you do a minimum over there at least. So that's a free money. But to protect your family and protect your wealth, make sure you take an IUL plan. So the IUL plan will be beneficial for your for your future, as like a protection for your life. And also this is accessible, like I mentioned before, right? Anytime you can take out the money, which is good. So make sure you have both. I would say I have both. So right, so now conclusion. So pretty much IUL offers tax free benefits, liquidity, downside protection. 401k provide employer contributions, structured retirement savings. A combination of both can optimize your financial need. So pretty much that's what it is. So let's conclude this presentation. So let me explain my conclusion. All right, so let's go to that. So, like I said, IUL is a beautiful product. This will give you a protection for your family and wealth, and also comes with a great investment. It's like a systematic investment plan. Definitely make sure you use of it. And if you have more questions, feel free to reach out to me. I will explain everything. And if you need an IUL plan, please reach out to me. Like I said, I'm a licensed professional, so I can help you out with that. And I work with almost 15 different companies, like AIG, Lincoln, Omaha State, pretty much a lot of companies. We have nationwide, and plenty of companies. So we can tailor fit a plan for you. If you are interested in one of them, please reach out to me. So I will leave my card in here, so you can I offer different products. We have 401k rollover. We have trust and will. I do that. I'm a public notary, and also we do IUL, term life, even travel protection plans, and all forms. So pretty much, if you need any financial assistance or any financial advice, please reach out to me. And please, I'll put my card. So make sure use that and keep it in your phone. If like I said, feel free to comment down below. And if you have any questions, feel free to ask me. I'll be more happy to help you with that. All right, so thanks for watching. I'll see you soon with another video. And make sure you, like I said, make sure you subscribe, because I'm gonna be explaining a lot about all the term insurance, will and trust, and all kind of stuff. So make sure you subscribe to my channel, and I'll see you soon with another video. Till then, it's me, Aldo, signing off. Bye bye.